Welcome to another video. Today we will be speaking about how you're supposed to approach the market from a multi-time frame analysis perspective. So there is a lot of value to be taken from the video. I will be sharing some free analysis and education showing you how you're supposed to approach the market, and this will help you with your own analysis to understand how you're supposed to do it. If you're new to the channel, I would like to introduce myself. I'm a top author on the TRADINGVIEW platform, as well as running an educational company and doing trading full-time. Without further ado, let's get straight in the video. Okay, so let's speak about gold. This is the first market I want to speak about. So from a monthly perspective, because always remember, monthly, weekly, and daily are for direction. The 4 hours is for entry. So starting from the monthly time frame, what kind of price action we have? First of all, you clearly can see that the market has created this overextended W formation to the upside. Now, after an overextended W formation, what do you expect is a push at least to the 382 Fibonacci taken on the impulse leg. So basically from the low to the high of the impulse. And what you expect is the market to go at least to the 382 retracement. And that is the reason for which we took short on the 4 hour time frame to this level. And I will now show you how we did it basically later on during the analysis when we will go down on the daily time frame. Now here from the monthly, so our first target was at the 382 and the market already hit our first target. So the next target is the 50%. Why it is the 50%? Now keep in mind that after an overextended W formation, the market is supposed to make a very deep pullback. Possibly the market is actually supposed to go and retest this level here, which was previous resistance across these levels and is now turn support. So overall, what do you expect is the market to go back and retest previous resistance, now turn support, before continuing with the push to the upside. But as you know, the market loves to move by steps, and anyway, by taking your Fibonacci from the low to the high, what you get is the clear levels that the market is supposed to go and test, the levels at which the market will find strong support. So first you're targeting the 382, then you're targeting the 50%, and then you're targeting the 0.618, the golden ratio, which it is not a surprise and it's not something that we didn't expect, that is actually lining up perfectly with the area that we want the market to go and retest, because in the market everything always connects. Okay, the market is like a puzzle and everything connects, and as you can see, the golden ratio is lining up perfectly with previous resistance turn support, and that is something that we expect the market to actually do. So overall, we're expecting the market to go and hit the 50% retracement. Let's go down on the weekly and see what kind of price action we're getting from a weekly perspective. So here in the weekly time frame, what you can clearly see, the market went up, then started some sort of a consolidation, tried to make another impulse to the upside, and the next candle made a very strong push to the downside. Now, if you look at the market from a structure perspective, you clearly see that you have an impulse followed by a correction or consolidation period going that basically went to retest exactly the previous support, now turn resistance, and you expect continuation to the downside. It's pretty clear that the market went for the retest of previous support, now turn resistance. All across this area, the market had found support, which is now turn resistance, and you expect continuation to the downside, because as you know, basically a previous support is turn resistance. If the market finds support and then breaks that support, that level of support is basically turn resistance, and you expect continuation to the downside. So overall, you're expecting continuation to the downside to your monthly target. Now, why this monthly target is a target that actually makes a lot of sense? Because if you look left, it was previous resistance here, very clear resistance, broke to the upside, went for a retest, and basically turned very strong support. If you zoom in, you see it even more clearly. It found resistance here, resistance, broke above, went for a perfect retest with this wicks, and then continuation to the upside. And our 382, which is our monthly target, is lining up perfectly with this area. And again, the fact that everything is lining up is not a surprise. Okay, things in the market will line up because everything must be in confluence. So another thing that you can clearly see, and you will tell me, okay, but it can't be like this. Yes, it is definitely like this. If you go down on the line chart, what you will clearly see, if you take your horizontal ray and put it exactly on the close in the market went for a perfect basically retest of this region. Why the market went so close to the close and then rejected? Because closes in the market, basically you will have a lot of orders stacked up exactly at that area, because they're very strong areas, because the market loves to respect the structure, and the structure is given by the closes in the market, especially the weekly closes. And that is the reason for which the market went exactly to that area and then rejected aggressively. Now let's go down on the daily and see what kind of price action we're getting from a daily perspective. So here on the daily, here from the daily time frame, what you can clearly see, the market went down, up, again up, creating this W formation that went extremely near. Basically, it almost hit and missed like for 2 pips, but it means that there were so many orders at this level that basically the market didn't even succeed in perfectly touching it. But it went really, really close. All the orders were activated and the market just rejected extremely strongly to the downside. And at the moment, the market actually obviously also broke structure, because you clearly had resistance here. The market broke above, went for a retest, and then broke back to the downside. So at the moment, the market is in a bearish environment, bearish structure, sorry, from a daily perspective. Now, on the 4-hour time frame, as you know, is just for entry. Now that you know that from the monthly, weekly, and daily, the market is supposed to go down to our monthly target, what is your job? Now, the job is, with your own strategy, to be monitoring the price action inside of this area for a potential short opportunity. Now, I can't give you the rules of my strategy, because obviously that is part of the mentorship program. But what I can tell you is that you're supposed to monitor price action inside of this area and wait for a clear entry. Now, use your own strategy, but monitor price action inside of this area. We will definitely be monitoring price action with the students when the market will make a pullback, and if the market will make a pullback inside of this area for a potential trade to the monthly target. Now, it's very important to say that we will only be entering the market if all our rules for entry will be satisfied. If all the rules will be satisfied, then we will definitely take this trade, and we will have a very high probability and risk to reward, and that is very important. But if our rules are not satisfied on the 4-hour time frame, so if, for example, the market on the 4-hour time frame never shows for example, a break of structure on our side, and the market just keeps pushing to the upside, then definitely we will not be involved in the trade, because it means that our probabilities are lower, and we don't want to have low probabilities or a bad risk to reward when we're taking trades. So this is overall what we have. You can incorporate this with your own analysis and trading plan for gold. We will definitely be monitoring gold. Okay, so the next pair I want to speak about is GBPCAD. So what do we clearly have here from the monthly time frame of GBPCAD? The market went up, made a push to the downside, again up, and again it made a push to the downside. So clearly the market has created an M formation, and that is the reason for which we were looking for a long with the students on GBPCAD. And by knowing that you were looking for a long, you had basically predicted a lot of months of price action. Now, at the moment, what do we have for GBPCAD? Clearly, the market had created an impulse. If you look at the most recent price action, followed by a correction. Now, that correction has exceeded all the Fibonacci levels, and it is now basically the market is approaching the previous resistance area. The market, as you can see, had found resistance here because it had made an impulse followed by a correction and another impulse to the downside. So basically, the market is currently at a resistance area, and we expect a push to the downside from this level. Now, what happens if we go down on the weekly time frame? If you go down on the weekly, you can see this even in a more clear way. The market had support here, and that support is term resistance. So basically, we are, from a weekly perspective, we are inside of our resistance zone, and we expect the market to make a push to the downside. Clearly not, we don't expect really a big push to the downside, but at least we expect some sort of retracement, and that is confirmed if we go down on the weekly time, on the daily time frame. If you go down on the daily, you can clearly see that what you get is a market that is currently creating this overextended W formation, and you're expecting a push to the downside. Now, you're expecting a push to the downside to where? You're expecting a push to the downside at least to this area here. Why to this area here? Because this is previous resistance, which is now turned support. So you're expecting a push to the downside. Now, if you go down on the 4 hours, there is one thing that appears immediately clear. Now, this is the trade that we took this week on a GBPCAD, but this is not relevant anymore. Now we need to look at what price action is showing us. Now, at the moment, from a 4-hour perspective, what you can clearly see is that the market is currently creating a series of higher highs and higher lows, meaning that on the 4 hours, we definitely can't be looking yet for a short, but we need to keep monitoring price action and being ready for when the market will be ready basically to shift to the downside. So what we will be doing with the students, we will definitely be monitoring price action on the 4-hour time frame of GBPCAD for this potential push to the downside. If the market on the 4-hour time frame will show one of our valid entries, then definitely we will be taking the short to this previous area of resistance, now turn support. If the 4-hour will not show one of our valid entries, then it means that we don't have high probabilities and we will be not taking the trade because the market has high probabilities of continuing to the upside. So overall, it's all about following your own trading plan. You can implement this with your own analysis, and I hope you found good value and education in it. I hope you enjoyed the video. If you did, make sure you smash the like button. It really does support the creation of more free analysis and education for all of you, as well as letting me know in the comments below, how do you think that I can improve these videos and provide more free value, and if you actually enjoyed the video. And if you have any kind of special requests of a video you want me to make, you can also post it in the comment section below. Now, if you still haven't, make sure you go check out the mentorship program. It's a very complete program. It has everything that you need to actually trade consistently, all the rules of my strategies, as well as a new daily market breakdown every day directly from me, showing you which pairs are near to satisfy all the rules of the strategies, and me that answer all of your questions. Basically, you will have the answer directly from me to any question that you have within 24 hours in video format. So it's a very complete mentorship program. Without further ado, I will invite you to go and check out the next video.